All right, welcome to The Explainer. Today, we're going to break down something absolutely critical for anyone in the crypto space. Because in this world, things move so fast that what you don't know about your competitors, well, it's not just a blind spot. It can actively wreck your portfolio.
Let's just kick things off with this idea because it really sets the stage perfectly. It tells you that watching your rivals isn't just a nice to have or something for savvy traders. Nope. It's a fundamental requirement for protecting the very assets you're holding right now.
So, that's the million-dollar question, right? How do you actually turn just watching your rivals into a winning strategy? That's exactly what we're going to lay out in this explainer, a clear framework for both investors and builders. So yeah, let's get into it. Okay, first things first, we have to really get our heads around this risk. We need to define what this hidden short position actually means for your money and why it's such a quiet but dangerous threat. See, here's the thing. This isn't some bet you go out and make. It's a risk you take on completely by accident, just by not paying attention to the tech shifts happening all around you. You are, effectively, betting that your current investments will stay competitive without even realizing you've placed that bet.
And believe me, these impacts are not abstract. They are very, very real. I mean, imagine a rival network suddenly drops a huge upgrade. Maybe they slash their transaction fees, or they roll out seamless account abstraction that makes their crypto wallets as easy as a normal app. The entire game can change, literally overnight. Capital and users, they're going to flow to wherever it's better, faster, or cheaper. It's that simple.
And what you end up with is this, a massive widening gap. On one hand, you've got the ecosystems that are actually adapting. They're shipping upgrades that matter, they're pulling in money and users, and their growth just speeds up. But on the other hand, you have these stagnant projects left clinging to old stories with their tokens priced on data that's totally out of date. And that gap between them just gets bigger and bigger.
Okay, so we get the why this is so important. Now let's get into the what. This is the fun part, building your actual watch list of what you need to be tracking to keep yourself safe.
So a systematic watch list, like what you see here. This is your secret weapon. It's how you turn all that crazy tech jargon into something that actually matters to your wallet. I mean, take time to finality. What happens when a competitor improves that? Well, for a decentralized exchange on your chain, it means their speed advantage might just disappear. Poof! This table is basically your cheat sheet for connecting those tech dots to the real-world money consequences.
And to really make this work, you've got to get granular. You have to look right under the hood, at the very engine of the blockchain. We're talking about things like the runtime, the virtual machine, the staking economics. These are the core components that drive all those performance and cost advantages we were just talking about.
All right, now for the how. Look, it's one thing to spot a signal, but it's a whole other ballgame to turn that signal into a smart, actionable decision. So let's break down the playbook for investors and for builders.
If you're an investor, listen up, because timing is everything. An announcement on a DevNet, that's your early warning. Time to start taking notes. When it hits the testnet and you can see real performance data, that's when you update your financial models. And once it's live on mainnet and you see actual users and capital moving in, that's your cue to adjust your positions. You got to act on data, not just the hype. And here's something a lot of people miss: governance. It's a huge part of the signal. A project's ability to actually ship these improvements safely and quickly says a lot about its long-term health. You know, chains with messy governance or that rely on just one software client, they can get stuck in the mud, making them easy targets for competitors.
All right, let's flip the script for a second. What if you're a builder? You're actually building a project on one of these chains. How in the world do you protect what you've built when the platform underneath you starts to fall behind?
For you builders out there, you need a game plan. And it's not about panicking and trying to copy every little thing your competitors do. It's about protecting your core advantage while staying super nimble. So for example, if a rival chain gets faster, you don't just try to get faster. Maybe, like Step 5 says, you double down on your project's amazing security or developer tools. The key is to be ready to adapt and, hey, even ready to move if you have to.
So after all the tech talk, after all the roadmaps, at the end of the day, there's really only one metric that tells you if an upgrade is the real deal or just a bunch of hot air. And that metric is liquidity. I mean, this says it all, right? An amazing technical upgrade that nobody actually uses, it's worthless. To find the truth, you've got to follow the money and follow the developers. That is the ultimate proof of adoption. And you can see the footprints right there on-chain. You just have to know where to look. We're talking about things like, are funds flowing into the new chain through bridges? Is its supply of stablecoins going up? Are the big DEX aggregators starting to send more trades through it? These numbers don't lie. They show you exactly where the market is placing its bets.
And really, it boils down to one of two things. It's a pretty clear outcome. A successful upgrade pulls in capital, liquidity grows, and the network effects just snowball. A failed one? Well, that's just a good story with no users, which leads to capital leaving for better opportunities.
And wow, the consequences can hit hard and fast. When an ecosystem starts to bleed capital, it's not a slow leak, it's a gusher. An outflow like this is a massive blinking red light that the market has already voted with its feet.
So what's the big takeaway here? It's that narrative arbitrage is a very, very real thing. If you're paying attention to these cycles, you have this massive edge. It's an edge you can turn directly into profit by getting in early, or use to save your skin by getting out before everyone else realizes the game has changed.
You know, this quote from the source material really wraps it all up perfectly. It's the core idea of this whole explainer. In a market like this, a tech advantage can grow exponentially. But you know what grows even faster? The losses you'll take if you just sit back and do nothing. Standing still is the same as moving backward.
So I'll just leave you with this question to chew on. Now that you know the stakes and you've seen the playbook, what are you going to do to make sure you're not accidentally holding a hidden short position against your own capital? Is your watch list ready?